guys. August the 6th, 2024. We're literally halfway through this year, and I could have sworn that I was just doing Christmas. I mean, just the other day, dude, I was doing Christmas.
Time in
crypto
moves incredibly quick and painfully slow at the same time. How is that possible?
Yeah. If you have Bitcoin at 69,000 and you're looking at 56, you know exactly what Sam just said.
That's right. Well, good to have everybody on the show, Chris. Did the world end based off our conversations yesterday? Was it kind of as you predicted? Are things not as bad as we thought? Or we've had a whole day to kind of look back at everything now?
Yeah, so far so good. The biggest thing I think to understand here is that everybody wants to get really emotional, but the fact is we had 1 day drop, which it was a drop. It wasn't anything to sneeze about, but as I keep saying, we didn't have the follow through when the U.S. market opened on Monday, and that to me is a big kind of well, we need to pause at least, because if things were as terrible as most of what you find on social media is kind of believes it to be, we should have seen these guys go risk off. I mean, the minute the market opened, because they couldn't do anything prior to that, right? These guys, it's the weekend, news hits on the weekend. Usually first thing Monday morning, if it's bad news, they're hitting risk off. And they didn't. Instead, we've been rallying since then. As a matter of fact, Bitcoin has rallied. It's cleared about 85% of what it lost the previous day so far. And so it'll be a big thing. If we close, for instance, with the Bitcoin, if we close above yesterday's high, so right now, it'll just depend on whatever chart you're looking at. But if I'm looking at the Binance Bitcoin USDT chart, that yesterday's swing high was right there around 58,305 and 59 cents. So if we can get a close above that, whether that's today or tomorrow or the next day, without going down further, if we can get a close above that, that's really bullish, because what we have is this huge candle with really, really significant volume, and price didn't break down further. Instead, it breaks out above it, right? So nearby, at least for Bitcoin, that's what I'm looking for. The Nikkei, worst drop there since Black Monday in 1987. And then today, or the next day for them, it's over now, but they had the largest rally there in quite a while. Largest percentage-wise, I think, since about 2008 or something like that. Largest point-wise for quite a while. So, again, you get those extreme kind of moves across them. And so, it's only 1 day. It's only the next day right now. So we're still just, is this a relief bounce, or is it going to be more meaningful? And it might take a little bit to figure that out. But for anybody looking that was hoping like, oh yeah, it's definitely, that's the bottom, we're going up. That isn't how it works, because it was such a big drop. So I think we're kind of right there. We're kind of on this. It looks good so far, but we definitely want to see some additional moves up. Like I said, a daily close. By the way, it's a daily close above that level I was talking about for Bitcoin. We want to see something like that as the first real clue that may be the low there. We may be heading out higher. But there are, of course, as we talked about, those higher levels when you look at the bigger structure that we have to still get through as well.
Chris, we were texting. Can you talk to me about what you mentioned over text about Claudia Sahm? I think, if I'm saying that right. And I haven't heard of this person before, and I also don't know what the Sahm rule is. So could you tell me who this person is and what the Sahm rule is? Yeah.
So Claudia Sahm was in the Fed there for a while back in the day. And she kind of came up, her idea was, well, let's see, how can we, for policy, because the idea of the Fed is to kind of try and, they want to kind of try and stay ahead, at least an understanding of what may be coming up. And so she wanted to look at it as, okay, well, how do we figure out by employment or by unemployment, are we coming into a recession? Is that starting to come in? And that way, policy-wise, we can start talking about it, what we need to do before it happens. And so the Sahm rule, basically, you take the 3-month average of unemployment and you compare it against the 12-month low. And if it's 0.5% or higher, then that should indicate that a recession is in, that we've got this recession going on. And so it was with last Friday's surprise 4.3 unemployment. that gave us a 0.53. So according to her rule, this indicator, we should, generally speaking, be in a recession. Now, that's been correct every time, potentially up till now. So I saw this. I've been arguing that post-COVID, we're in a different situation with the way our employment is. We're in a different situation with the way that our, just everything, kind of the economy, the way it is and everything right now. Everything's a lot different than what it was pre-COVID. Pre-COVID, it was a certain way. And so, I've been kind of arguing since last Friday that it's probably not really indicating a recession yet. And I just came across an article, which I posted there on Twitter for anybody that follows me there, where she was actually interviewed about it. And she suggested that that her SOM rule, let me see here. She cautioned against the SOM rule's current signaling of a recession. She says we're uncomfortably close to potentially being in one, but we're not in a recession yet. And so there's a chance that we may not actually hit that recession. So even she's like, listen, post-COVID, my SOM rule may not actually be as effective as I don't believe we're in a recession right now. Things don't seem to be pointing that way. And so when we look at things, we can look at the services PMI, which came out yesterday, the ISM. And what that is basically if you have a reading below 50, it says the economy's contracting. If you have a reading over 50, it says it's expanding. And so we came in at 51.4 yesterday. So we were 48.4 the month before. The next month, the reading we just got, we were 51.4. So services economy is growing. Now, people are going to point out and say, well, manufacturing PMI came out last Thursday, and that was actually down, right? That dropped a little bit. It was in the 40s. And okay, yeah, but really our economy is more of a servicing economy than a manufacturing economy.
Yeah.
So when I look at that, I'm more interested in what the services PMI says. And like I said, that came in there at 51.4. So, when we start kind of putting all these things together, we can look at, I've been talking about regional banks for a few months now. They're up 20 or 30% or something like that. Usually if the economy's softening, you're not going to see a rise in regional banks. Usually if the economy's softening, you're not going to see a rise with the IWM, Russell 2000 index. Again, these are the 2,000 smallest companies, basically, and because they're so small, most of their revenue comes from the U.S., which means they're more, They're more sensitive to what's going on economically in the U.S. And so, again, if the economy's softening, we shouldn't be seeing, we had a 40-somewhat% rise from last October when I was talking about it looked like it was a good time to buy toward the end of October. And so, you kind of look at all these things. It's not just, oh my God, the number jumped up, unemployment jumped up larger than we expected. So we're going into recession. There's all this other stuff kind of going on with it right now that I think you really have to look at. And so for me, while it's still possible, I definitely don't think we're in one yet. And I think there's a good chance we may not get into one. Again, a lot of stuff is spread real easily online, very high, very top level stuff, no real digging deep into it. And if you don't really understand what's going on, it sounds like it makes a lot of sense. But when you start digging into other stuff, it kind of gives you caution into what do those things really mean? Again, the thing I keep talking to everybody about is it was 4.3% unemployment, guys. Up until recently, that was historically in the U.S., that's been considered full employment. Fed funds rate being at 5.25%, 5.5%. Historically, just below average. Historically, it's about 5.5% to 6%. So it's kind of hard to suggest that we're going into a recession when we've got Fed funds rate at or below where it is historically average, at the same time that employment is where it historically has been full. Again, not saying it can't happen, but all this stuff gives me that pause and makes me go, okay, well, it needs to show us that we're doing that rather than we're just going to assume.
Gary, I have some questions for Chris, but I want to give you a chance to chime in.
Go ahead, buddy. I just sent a note out to everybody. I'd be interested to know if you feel like you're in a recession, as a family, or does it feel like it's robust? Because I agree with Chris. You can't have unemployment at 4%, and the Fed rate going down. Interest rates are they're going to clip rates. I actually don't even agree with them clipping rates. I don't know why they need to do that right now.
Yeah.
Like if you can't make money I have a mortgage at 2.35, and then I have some free money that I can do whatever I want from the banks at about 6.8. Like I look at my blended rate and go, okay, you guys don't like the 7%. The blended rate is in the 5s, man. It's awesome. Like if I can't borrow money at 5%, 6%, 7% and make money, I don't have a good business model. Like I really, like if I go to my clients and go, look, cost of money is 12%, 8%. I can invest in Bitcoin, or I can build this service for you and do a great job, but I have to charge you a fucking profit, man. Otherwise, I'm not going to be in business. This was my comment about, I spent 7 hours on this space last night. I'm just trying to, like, for me, it's 1,000 people in the room. Like, hey, are you guys ever would you pay for content? Because we're going through this whole thing about Google and all these people charging 30% for everything you do. And I'm like, fuck the platforms, dude. It's the guy with the content that is king. Okay. This whole decentralized thing was about bringing the artist direct to the user. Okay. It didn't say anything about bringing the artist and bypassing CBS records or whatever record company, right? And then go into Google, and then you get scraped for 30%. Like, that's weird. Okay. And I think the information here is so to me, people just going to have to change their entire model, how they value things, man. But most certainly they don't know how to value Bitcoin.
Yeah. Yeah.
Okay.
I agree.
Right. And then I don't think they value their own time. We may be off topic here, but if you go buy a car for $80,000 that you can't pay cash for, and you then pay 15% on 90% of that car, and you have a 5-year lock-in with that car, you can't even leave the country until you sell that car because you have it. It's in your bags. It's drowning you. You use it 4% of the time, and nobody gives a fuck.
Yeah.
Nobody cares what kind of car I drive in, dude. No, I go on a date. The girl didn't say, hey, did you drive or did you hire Uber? Quite frankly, if I hired an Uber, she probably thinks we're going to have a party. Right. And if I'm driving, she's going to be worried. So I know we're way off topic here, but I think everything's backwards. Really. Well, I think you almost have to look at this world as, hey, we're going through something we've never been through before.
Yeah. And I think part of that also is, again, you and I have been around long enough to remember, the way things were prior to the internet, the way things were in the 80s and going back in that. And so when we look into the grand scheme of things, again, we're kind of where we are historically on average. A lot of the people are younger and they're used to the, near zero interest rate. They're used to the, all these things. And now things have kind of gone up. And so, and people might take this offensively. I don't mean it that way, but a lot of people have been living beyond their means, buying bigger houses or, buying houses, buying cars, multiple cars, everybody has to have a phone now. How much is that costing you every month? Internet connection, all these things that are a lot more bills that, in the grand scheme of things, how many times a week do most people eat out, on top of that, which I don't know now with groceries have kind of gone up. So it's almost like, well, sometimes you're almost paying what you're going to do going out to a cheap drive-through restaurant. But I think there's a lot to be said about that because as I talked about many times before, and that even comes with this idea of the recession, truth is truth, whether you choose to believe it or not. But if a group of people decide not to believe it and they believe the opposite, they're going to, their actions are going to be in relation to what they believe, not what actually is truth, right? So we can look through all that, but especially when we look to the recession. And so if the economic indicators that we're usually looking at are suggesting that the economy is still growing, things are still going there, but people are feeling like there's a recession there. Could that actually bring on a recession? And sure, I think it's definitely possible that it could, because if you believe a recession's coming, you're going to change your spending habits. You're going to change the things that you're doing. And so, I think that's definitely something we can look at as well. The indicators can say what they want to say all day long, but if enough people believe over a long enough period of time that we're in a recession or that it's coming, their habits and the way they spend or whatever are going to change. And eventually that has a good chance of potentially, making it happen. But as far as what it goes, we're not there yet.
I have a question based off that, though, because can't you say at this point, and this is when we talk about numbers, I sometimes, I don't want to say I get confused, but I get kind of jilted by the fact that, are the numbers that are produced by our government reliable? Like for inflation, for example, we know they continue to change the basket of goods to say that inflation isn't as high as it is. So when you're looking at numbers, at what point does the sentiment of people on the street actually become a better measure of how the economy is than what we're seeing from the government reporting?
Yeah, so people want to believe the government's pulling the wool over their eyes, or trying to. Everybody wants to believe government's evil, and I don't necessarily believe it's a great thing, centralized government. But this is people in general. This is what they want to feel. So they're going to look at that and say, okay, yeah, well, look, they changed. I'm glad you brought up, the basket of goods used to determine what the inflation is. Look, they changed it again, so they're just trying to trick us. Well, no, not really. The economy and the way that people spend money is what they're trying to figure out. So they're going to change that basket of goods to try and reflect better how people are spending their money, to get an idea of, are people, holding back on their spending or not? Are things generally getting more expensive or not? Those kind of things. So I think it's more that. I think it's more that's what's going on. But people,
I don't follow that though, Chris, because
okay,
for inflation, you need a standard. And so, for example, they took meat, poultry, and pork, and then gas out of that basket of goods. So I don't care how people are spending their money. All I need is a metric, which, by the way, those items people will spend no matter what, right? Those are what I would call basic goods, basic necessities. Maybe people are buying beef, for example, less because they can't afford it. But if we're going to measure inflation as an entity, you have to have a standard. And if you constantly change the basket of goods, you have no standard. So that's why I just don't understand, even if government's not doing it maliciously, then I would just say that I don't understand the logic of changing your standard, which brings me back to the point of, how do I, as someone who reads charts or doesn't read charts, like, how do you look at data that isn't necessarily good data? And at one point you say, hey, maybe the people who just think they're living in a worse condition actually have a better read of the market than the numbers that we're reporting, because there's no accurate number, there's no accurate standard.
Yeah. So again, inflation is based on, when we're looking at inflation numbers to understand what's going on, it has to change. I mean, unfortunately, you can't, the way that people spend money today is not the way they spent it in 1990, which is not the way they spent it in 1975, right? As just like the way in which we are employed has changed, right? Especially since, post-COVID, gig economy, content creation, all this kind of stuff. And so unfortunately, you can't keep the same thing, because the way in which people spend their money, decade after decade does change. So if you're measuring the same thing at one point, and the way in which people are spending their money changes, well, that's going to give you a wrong read, right? Because you're not actually focusing on what people are spending money on, and instead you're focused on something that they may not be. It kind of like the person who, when cell phones first came out, you still had people holding on to beepers, right? And you go, okay, well, is it the cell phone or the beeper? The beeper, well, the beeper went out. People changed the way in which they were doing things. And so, that's kind of where you get to with it. I don't think the government is out there. I know, people in general want to say the government's stupid. They want to say the Fed is stupid. They want to say they're out there trying to lie to them about numbers. And I'm not saying that they may not try to massage the way in which things go. That's always possible. but I don't think that they're outright lying to us in terms of numbers. Again, when we look at things like, for instance, the employment rate, everybody goes on, oh, but they always change it. Well, that's what it does, right? So if you look back, if you go to the Fed site and you look up their employment data and all that and how they do it, it's basically it's a survey that's sent out, and it doesn't have to be responded to, and they have a certain date, and all they can do is collect the information from that certain date to get this idea of what that unemployment is. Now, as numbers come in afterward and things come in afterward, they revise numbers for the next 2 months, for the following 2 months, and then they revise a year later, potentially, if they need to. And so it's not because they're trying to, trick and hide numbers or whatever. It's because, again, it's a voluntary survey that they send out when they do it. And so what we know is over at least this last year, the responses have been less than what they normally were. It's at least the last year, maybe the last 2 years, something like that. But I know it's been more recently. So, there's that going in there. So I don't think like when government says, oh, it's this number, and then they revise it the next month, everybody's like, oh, look, they were just messing with, just trying to make it look like that. So that way they can revise it next month when you're not paying attention. Again, these are all the very kind of retail ideas of what are going on. And once again, I don't mean retail to be derogatory. I just mean that group of people, right? They're at that certain level of thought when it comes to these things. And, so we get it in there. And so my thing is, we had a 4.3%, supposedly the previous month. But I think that's going to change. I've been talking about, I think they're going to revise that number upward because we had things like Hurricane Beryl over here in Texas, which a lot of people, the BLS said it didn't really have an effect on it, but we'll see how those state numbers come up with it to really kind of look at it. But we had that. We had some other temporary people out of their jobs temporarily, a lot higher than normal in July. So we had a lot of that stuff coming in, which may have affected actually the numbers given back to the BLS. Again, I think worst case scenario, I think 4.3 just might have been this this aberration, this one time maybe out of the way thing. Other people that are seeing that, they say, okay, yeah, but it's been rising from 3.5. Well, yeah, it was historically low, below 4%. It's never been that long below 4%. I was one of the people out there when we hit 3.6% going, okay, there may be a recession incoming here because historically we get to the 3.6, 3.4, somewhere around there. And pretty soon after it starts rising back up. That usually indicates where a recession begins because it's too low, right? If we look back 50 years, that's what we get. And then we didn't. We stayed below 4% over and over and over again. So when people say, oh, it's rising, well, yeah, it's got to rise off that level. It's taken a lot longer to rise off that. But, at the end of the day, 4.3% has basically been considered full employment for most of, U.S. history that we've been tracking it. So, again, it comes into, what people believe versus what's really going on. And it's easy because government has been so deceitful in the past, right? Different things. It's easy to blame them. Say, oh, well, they are lying to us. They are lying to us.
When I don't know if I'd even say lying, but I remember I was reading a report by Jeffrey Schneider, who used to be with Alhambra Partners out of Palm Beach. Now he's become more of a YouTube personality, but he's a Eurodollar. I'd call him a Eurodollar expert. But he wrote a report about how economists now, when the jobs number reports come out, they automatically deduct anywhere from 100,000 to 200,000 jobs from whatever the most recent jobs number report is. Because the month after the report, it's revised always downward. And then the next month after the report, it's revised downward again. So if you're looking for an accurate snapshot of where we're at, which is what the whole point of these reports are, right? If you find that, okay, well, on average, we're 100,000, 200,000 jobs less, and the consumer or the market has to adjust that for government, right? Or essentially put that out there. I don't get how people can really read the market well because it seems like the data, by the time you have the accurate data, well, 2 months is gone, right? So how do you make a decision based off of today when the data is going to be revised 2 months later to know if your trade is good or not?
Yeah. So two things there. One, yeah, we've been in this cycle for, post-pandemic, basically, where it seems like, most of the time the numbers are revised down. The one thing I would say about that again is our employment, the way in which our employment is right now is significantly different than it was prior, pre-pandemic.
Can you touch on that? Can you go into
Yeah.
more detail on that?
Yeah. So again, one thing is the way in which we are employed now, right? So post-pandemic, gig economy, much different than, we didn't really have much of that there in the pre-pandemic, and it continues to rise. Again, content creation, content creators, those who are out there saying, yeah, I'm a content creator, this is full-time my job, or even part-time my job. That's another thing that we didn't have very much of prior to the pandemic. And then we can look at also, the people out there that are holding two jobs, whether they be a full-time and a part-time, two part-time, two, variable hour jobs, things like that. So all these things are a lot different today, post-pandemic than they were pre-pandemic. And so that's going to change, I believe, which again was part of my reasoning for why the SOM rule likely on Friday didn't actually signal a recession. I mean, it would have pre-pandemic, but because the employment landscape has changed so much in the way which we're doing it since then, it really gives question. And then, of course, with SOM coming up there herself and saying, yeah, we're not in a recession yet. We're uncomfortably close to possibly going into one, but we may not get there.
Wouldn't you just change the metric you look at, Chris, though? For example, why not just disregard unemployment then and look at the workforce participation rate?
Yeah, so that's what you want to do. So everybody focuses on the unemployment number only. Usually when I'm discussing it, on my Friday shows, we'll talk about here's the unemployment number, but here is the underemployed number. Here is the, all those other things in there, including, and maybe even more importantly, the weekly hours, how many hours are being worked that week on average, as well as the average hourly pay.
And so they actually measure the amount of weekly hours.
Yeah, you can go look at that and you can see whether they're dropping or whether they're up. But then you also, again, especially with something like that, you have to look at, things like, did you have a hurricane come through and make it so people weren't really working for 2 weeks out of that month, right? Or whatever else may be kind of going on there. There's a lot of aberrations that happened during July, which kind of gives this idea that maybe, again, those numbers will be revised upward. And I don't know if they will, but again, I'm just looking at it here and looking at what's going on there in July. Say, okay, yeah, I think probably that's what will happen. So that's the first part of it. The second part of it is exactly why I trade charts and not, the economic numbers, the economic data, because when you're dealing with economic data and they can be changed, they can be done, that is going to affect, whether your trade is really kind of good or not. But even that comes back to, does the largest group of people in the markets who are trading that information, how are they viewing it? And so even if the numbers get revised something else later, if everybody's kind of trading those numbers as they sit, well, I mean, the market's going to respond in such a way, right? So there's that in there as well. But again, for me, I don't trade on news events. I understand how they go, and we look at them when we discuss them, and I talk about them because people are, again, get very emotional, and panic is easy, elation is easy, and so I talk about it, kind of discuss them, and get more into the nitty gritty versus just the high level. Well, this is the result, so this is what's going to happen. What brings us to that result?
Swami has a comment. He says, tenet number 1 of charting and analysis, the market discounts everything, which includes economic data. What does that mean?
Yeah. So basically, he's saying preacher, Chris. Yeah. So basically, when you're looking at the charts, again, the whole idea is you have your economic information, right? And then you have what people are actually doing. I mean, at the end of the day, this is what it comes out to. And, as we continue to talk about, there is this idea of social mood and how are people in general feeling, the market participants. And we know how they're feeling almost immediately because of their participation or non-participation in the market. So, when they're, when you're looking at that technical analysis based on that, it's going to give you that the much more realistic picture of what's actually going on, which is how when we're looking at the charts, we can say, okay, yeah, well, this is where we're at. So the economic numbers will probably come out this way or that way. Because you look on the chart, you go, okay, well, technical analysis, however you're looking at it, says that we've bottomed here and we've got these numbers coming out. Odds are more likely than not, numbers are going to be better because it's going to go up higher there. And so that's what we're kind of looking at, right? We're looking at, forget what the government says or what, analysts and whatever are saying out there about fundamentals. Economic numbers, because economic numbers are always lagging, right? They're always what's happened in the past. And you look at, okay, well, what's happening right now? How is the market? How are the market participants actually involving themselves in the market? Are they buying? Because if they're buying, they're not feeling too bad about the economy. Are they selling? If they're selling, well, they feel like something may be coming up, something may be happening. And so those are things we kind of want to watch there with that.
Gary, sorry to suck up all the air if you have any comments or questions.
No, it's good for me to listen to this because I was just, while y'all were talking about this, I went in and said, well, what's the average work week for the average worker under these statistics? It's 34.6 hours.
Yeah.
The average income is $1,070 per week. That's $55,000 a year. For working 21% of your month, like per week, you have 160 hours a week and you're only working 34.
Yeah. And
then you're complaining about only making 55. Why don't you work 70 hours, man? Like, I don't really get it. Okay. Like, if you're working 34 and I'm working 50, I'm going to crush you. Yeah. If you're working 34 and your brain and you're listening to spaces while you're working, and I'm working 75 to 80 to 100 hours, don't complain to me that you can't buy an apple in the store, dude, or eggs, or take your kids to school. So you're not working as hard as I am.
Yeah.
Period, man. And I don't get it. 36 hours out of 168. That's literally 20% of what the fuck are you doing with the other 80% of your time? You can only sleep 8 hours a day. 8 hours a day times 7 is 56 hours. So we got 56 hours we're sleeping every week. Did I do that math right? Yeah, I think that's right? You have a total of 168 hours in that week. We're working 34. We're sleeping 56.
Yeah.
Like, I actually don't sleep very well. So I'm probably so inverted. I'm probably sleeping 4 hours a day.
Yeah.
And then my mind's always thinking about the game. But see, and the way I look at it is that I'm not working 34 hours a day. I actually probably work 3 hours a day, and the rest of it's just fun. It's the grindy shit when I see you in my office at 9 o'clock saying, hey, we got to go through the agenda. I'm like, fuck you, dude. I don't want to go through the agenda. That's not any fun. But the rest of it, if you find the right gig, look, my thesis is that if you're only working 34.6 hours a week, you hate your life. Like, I'm pretty, I have literally enjoyed what I've done most of my entire life. Like for the most part, my jobs were like missions. They were, and when it's a mission, I am awesome. And when it's like drudgery, I am really not fun to be around. So I don't really get it. I think this recession thing is, at least for Americans that want to work, I think this is self-inflicted wound, dude.
Well, I saw some research not too long ago that said something like, I can't remember if it's millennials or Gen Z, at least Gen Z, were more interested in that work-life balance, But you and I, we come from a previous thought process where we just go out there and we work and we do, that's what we're focused on. I'm a big believer in, especially if you're male, that your 20s, young 30s, mid 30s even, you should be working your butt off. You should be setting up for the rest of your life, because if you do it then, the rest of your life has such a great potential in terms of investments you've made, in terms of the way in which you've set yourself up. I just, I kind of look at this and I struggle a bit with the idea of work-life relationship when you're in your 20s. Stop trying to get married at 20. Stop trying to, do all that stuff. Because all those things become extra responsibilities, which not that it's a terrible thing to have responsibility, but where you focus your attention is where you're going to get your results. And if you can focus, when you're young and you're full of energy and your stamina is there and you can go out there, you can bust your butt for, tons of hours a week and really put together, maybe start a business, do all these things, that's going to pay off exponentially. I mean, like exponentially greater, when you're in your mid 30s and you get to your 40s, you get to your 50s, and let's face it, realistically, women kind of hit their peak mid 20s, maybe. Men hit their peak mid 40s, mid 40s, 50. And
Dude,
so
you're going to irritate some women.
I
got to tell you, I totally disagree that women peak out in their mid 20s. Okay. Like I'm not agreeing on that one, and I'm not being political. But I hear what you're saying.
Yeah. When I say peak, of course, I mean, like they hit their full maturity. You might even argue that they have their greatest value toward men at that point. I know that goes different. It goes against, generally the way in which modern world believes, women should be out there, working all the time and fighting against men for jobs and conflict. I'm not a big believer in all that kind of stuff. So I'm doing my best here to give you a lot of really volatile stuff here, so you can get a lot of comments and people can hate me for you on there. Yeah, not you, of course.
Love it. Little sex baiting. Yeah, I bet you most women most women that have children work more than 36.4 hours a week.
Yeah.
See, it just doesn't make sense to me. Okay. Like you're not going to be a professional athlete working 34 hours a week.
Yeah.
Okay. I have seen people come to the office on Monday and walk in their office. I'm like, okay, hey, what are you working on? Well, I'm preparing for tomorrow. I'm like, you're coming to the office at 9 o'clock in the morning and you're preparing your agenda for this week. You should have done that Sunday, dude.
Yeah.
And you should be on the phone actually making calls right now. But instead you got Twitter in your earbud.
Yep.
Or listening to music, or you came to the office high, or whatever you're doing, and you wonder why you get passed over it. You wonder why I go hire a 27-year-old kid like sitting across from video who has never done any of this stuff except politics. Like, because, well, he's a blank sheet. If he knows how to show up on time, I could probably teach him some shit.
Yeah.
And then you pass over people that have experience because, well, dude, you're lazy. You're fucking lazy. I think half of this is people are just lazy, dude. I have never met anybody until I met Trump face to face the other day that I was scared to work for. In my entire life, I have always said, I will carry my fair share or probably more of the water. I meet him. I'm like, I don't know, dude. I think you could bury me. But see, I admire that, man. I think that's really awesome.
Yeah. Yeah. And I see somebody there bringing up some points, about the currency, inflation and whatnot with that. I mean, there is some of that, to put in there, but is that in and of itself the thing? I think it's part of it, but, I think a lot of it also comes into, are you upskilling? If you're working for somebody, are you bettering? And for a lot of people, it's not even necessarily technical skills, guys. I'll tell you what, if you're working for somebody else, you should be developing your communication skills. Anything you're doing, communication, absolute number one skill you can have that's going to make you so much more money via either just having your own company or working your way up in another company. But all those soft skills that people, I don't know, I kind of look at it, these Gen Z and these that are basically raised on social media, on phones and whatever. I notice a lot in general seem to have a lot more difficulty with face-to-face communication. They're used to on the phone doing the thing versus, they get really bad off when they're trying to do a face-to-face thing. So, when I look at that, I think part of the story as well is just, are you actually increasing your skill set in an area that's required? Because the reality of it is, as technology continues to increase, jobs are going to go out of favor. New jobs are going to be created. They say, oh, AI is coming in. It's going to take all these jobs. Well, it's going to take some jobs, but it creates new jobs as well. Do you know how much you're getting paid if you can prompt really well? You're starting off at $200,000-$300,000 a year, starting off. So, it's not so much, I think, generally that
dude, housekeepers in Miami, 150 G's a year.
Oh yeah.
My brother said he pays his housekeepers more than that. And like, there's so many of these opportunities though. Miami, like you look at Miami, you're like, oh, that's definitely going to happen. I could have told you that a year ago. And that's the first one. Okay. Then the chefs are going to make $300,000. The restaurants will go up in price. Everything. They start with the housekeeper because rich people need a clean place to live in. It's a canary in the coal mine. It's like, whoa, you're paying housekeepers $150,000. Do you know what that's going to do to the market, dude? Uber drivers are going to become housekeepers. Well, guarantee you, dude, right?
Yeah.
And this is like people that don't have a massive amount of skills. They should look around and go, hey, there's an opportunity. Okay. Like, not only could you triple, I think I pay Bobby $70,000 a year, bonuses and everything, but these people could double their income. The problem is, if you're in Miami, probably going to spend that much money just getting to the office, getting to the house, right? It's tough. But it'll absolutely destroy the market over there, man, where nothing is cheap. You're probably going to have to make $400,000 a year just to survive in Miami.
Yeah. And that's the other thing, right? So people are like, oh, well, things are so expensive where I'm at. Well, maybe again, Miami, maybe in Austin, Texas, these main hubs. But if that's really a concern to you, you start looking online and going, okay, where is the cost of living a lot lower? But I can still do my thing. There's so many companies now that will allow you to work from home, at least part of the time, there's that possibility. Again, you can go and start businesses. People get so freaked out about starting business. Again, you don't have to, but if you're going to, you don't even have to do something really technologically great. Start a boring business, trash removal, tree clipping, these things, these boring jobs, or a little bit of manual labor jobs, house cleaning. You could start a house cleaning service and you could outsource it. There's so many independent people out there doing, cleaning houses and whatnot. You could actually create a company and just outsource the jobs to them. You get paid the difference between the premium and what you're paying them, and everybody's happy. They got, maybe somebody more professional running, getting them the jobs and whatnot. They've got guaranteed money coming in. You've got money coming in. So, I mean, there's just, I think a lot of it just is people are not thinking beyond their comfort zone. They're not thinking beyond what they know. They're not willing to move to somewhere where maybe what they do, they can get a job doing what they're doing. And maybe the job will pay less wherever they're moving to, but the cost of living is so much lower that effectively they're getting a greater return, on their income that they're making. So, again, and I always say these things and somebody always gets offended, and it is what it is. But if there's one thing I've learned in coming up here in a few months, 50 years of being on this planet, it's all in how you look at things, all in how you view things. That view is going to color the way in which you believe things are and the actions that you take. So for me, when somebody says, oh, this or that, I'm always looking at, okay, but how are you viewing it? Is it possible you could view it in a different way and maybe create a better situation? So, yeah.
But see, here's some good ideas like mobile massage, dog walking, all these. I mean, I pay somebody $200 to come give me a massage.
Yeah.
That's pretty good living, man. And if you do a great job, you end up doing 3 of my buddies.
There you go.
Hey, listen, I put the chart up on Bitcoin because, people are going to crush me if I don't talk about Bitcoin. We're talking about a lot of things other than finance. What the hell happened here, buddy, in the last 3 or 4 days? You want to kind of walk through this dip and walk people through it? It's a nice, clean chart.
Yeah. So Friday was what? It was the 6th, 5th, 4th, 3rd, the 2nd. Yeah. And so, that puts us up there toward, that swing high. Again, I think a lot of it is more of the overall belief that something may or may not be happening. And so what do I mean? Well, we get up there. So we've had for 2 years, everybody, oh my God, recession. And then Friday, and then here, especially for Bitcoin, the last 5 months, it's a cycle top, right? And then Friday comes in and you get the unemployment numbers, which are worse than expected. But again, worse than they expected 4.1. It came out of 4.3. But the reality is 4.3, again, as I said earlier, is for the longest time in history, it's been full employment. So in the grand scheme of things, I don't think the deal is really there. So you have all that coming on. And then you had potential yen carry trade unwinding. Now, when I look at that, the real thing kind of came in there Sunday coming into Monday, right? That daily candle, which starts, UTC, 12 a.m. UTC. So in the evening on Sunday here in the US, and comes into Monday. And so you have all that, but I think, especially based on the rally we're getting so far, this bounce we're getting so far, for yesterday, almost clearing the entire of yesterday, as you can see right here, getting up there. I think a lot more of it was this perception that things just that the shit hit the fan, basically, and everything was going to hell all of a sudden. And I think that's what that the biggest issue with that drop was. But you can see from the volume that there was demand down there at that 50,000 area, a significant amount of demand.
Yeah, this is double the volume of most prior periods, right? At least double the volume.
Oh, yeah. I mean, it's a significant amount of volume that came in. And so there's people waiting there ready to buy at that area. And so what you do is you end up now, we're back above the breakdown of that range low, that previous July 5th low over there. And we're back above that, which means people that were breakdown traders that shorted that below that, on that breakdown are now underwater. Now, if you're higher up and you're shorting, you're just losing a lot of profit right now, hoping it goes back down, trying to convince yourself that it's just a dead cat bounce. It'll continue lower, and it may. But if you were a breakdown trader, a breakout trader, and you went short on that breakdown of July 5th, you are absolutely well underwater right now, and you're scared as hell. And so when we look at that, most retail traders, unfortunately, are going to wait for liquidation. So they're going to wait till it liquidates. Now, what happens when it liquidates? That means your short gets married to a long. So, your short's closed out. So there's a long now that takes that out. If you're in that position, now you want to go long. So you add your long in there, and that kind of adds the fuel. And that's why you'll often see a strong rally back off a sharp drop like that. But again, it all comes back to the fact that when Monday opened, and I cannot say this enough, when the legacy markets opened on Monday, right? There was no, they didn't pile in and start selling off everything. They didn't pile in and sell off stocks. They didn't pile in and sell off Bitcoin. They didn't pile in and sell off ETFs. What they did was they bought. And so, again, to me, that's significant enough to where it suggests there really may be a bottom in there. But, we do need those closes higher to really kind of confirm that. So you get basically people freaked out because they thought stuff. Oh, and the other thing that was happening this weekend, wasn't it Iran saying that they were going to bomb the hell out of Israel on Sunday or something like that? And that never
materialized. Yeah, it's supposed to be within the next 48 hours, but it hasn't happened as far as I recently checked. But yeah, they're still even talking about that. So, when we compile that on with it as well. And so, come Monday morning, that didn't happen. All this stuff. And so, again, I think it was a lot of fear that came in there. I don't think it was technically as destructive as what everybody was saying. So at least that's what we're looking at right now, especially with this rally back up into, rally back up above that July 5th and almost taking out yesterday's swing high so far. So, again, the carry
yesterday's swing high was where? It looks to me like it's already there.
No, it was up. I think you got a 4-hour chart on there.
Oh yeah, I do.
Yeah, up there probably around 58,300 or so. If you put that on a daily chart, it's probably that big red candle that you have there. Oh, there a little bit.
I'll move it to a day chart.
Do the daily. Yeah, that big red candle right there.
Explain to people that big red wick all the way down to 49. Can you walk people through what's happening and why that is so skinny?
Yeah, so this is my favorite thing. At TWC, the basis of what we do with our group coaches, we teach people how and why markets move the way they do. And a lot of that is in understanding structure and what's actually going on and what's going on with the market participants. And the other big part of that is this volume and price action relationship. And so what happens is, we have that from the all-time high to yesterday, we have that big range, right? And yesterday was that breakdown really kind of below the range. We had July 5th, which was just kind of a quick move down and back up, large wick there, small candle body at the top. But this was the big one, right? So what do we look at? Well, if we're looking at that, what you see is generally volume is about even where it is for that rally up from July 5th to the move back down. The only real thing that happens in there is you have a giant spike of volume that came out yesterday. So when I look at that, if I don't see volume expansion into that rally, into that big move, then what it suggests is that you have an attempt to trap people. And so you break down below the swing low with a lot of volume, but all you get like 8 or 9%. That's as far as it fell below that July 5th. And then what happens is you have a huge bit of volume, and so it pushes price back up. And that wick is showing you that demand is there. Now, overall, there was more supply than demand for the day because price closed lower than where it opened. But that big, huge wick at the bottom is significant because it tells you that demand showed up in spades. And so you watch that and you go, okay, now there's potentially a reversal coming at this point. How does it play out over the next few days now? And as you can see today, we are so far continuing to rally, which is why it becomes so important that we get a daily close, again, whether it's today or tomorrow or Wednesday, without dropping down below the swing low. We want a daily close above yesterday's swing high because you have all that volume in that large candle on that breakdown. And so what happens is if you get a close above that, it tells you that supply is done. Supply, nobody that's really willing to jump in there and do it, either they don't have the supply to continue putting it in the market, or if they have the supply, they've given up because the market's telling them, listen, we're here. We don't want this, coming down lower. We're going to buy this up. And so if you're a seller, you're like, well, shoot, I'm not going to keep selling down there because the market's just going to eat it up and send us back up. And so when you actually get that close above that big candle with that outsized, exponentially greater volume coming with it, it tells you that demand won out. Demand beat supply, where it should have continued going down lower because you broke down below that range low, below that, that recent swing low there. And so that's really what we're looking at that point. Again, it by itself doesn't say, listen, that's definitely the bottom, we're going up. You're going to look for these steps here on the daily, these higher levels, but that's your starting point. And if you look at that and you don't go, okay, there may be a bottom here. If you're not at least saying that, you're likely getting caught a lot more often than you're right. Instead of locking in profits, you're probably losing a lot of money along the way that you could have actually been logging in as profit. Especially if you entered a short up near the top or anywhere prior to where we're at right now. So yeah.
So if I look at this thing really needs to get to either retest the 50 or punch through 58-ish. I don't know if you can see my little thing, but it's got to get through this volume right here, right? Can you see it? Back to July 5th. It's got to go push through the July 5th numbers and work its way all the way back up to 68. There's not going to be much volume between 58 and 60. Well, there'll be volume at 62, 63, right?
Yeah. So a lot of what we'll see. So one thing that I remember I used to hear quite a bit when I started really talking a lot, online with what was going on was people would always ask when you get to the bottom, and I'd be like, okay, yeah, here's a bottom. We're going to head up here. And they would be like, well, where's the volume going to come from? And that's not the way it works, right? The volume comes in on that big move to the bottom. And the thing is, you clear out all the supply, because left to its own devices, price will generally continue to move up and to the right on the chart there. If you don't touch it, generally speaking, asset prices tend to rise. And so what happens is when you get that big move down there and supply gets wiped out, those who are willing, that loose supply, those who are willing to put it in, well, then you have significantly less supply that's going to come in on the move as you're going up. So what you'll often see is it's not that volume is going to spike up and go huge. You'll see volume will often be less than that spike at the low as it continues to rally up toward the top of your range. Now, your volume will usually kick in once you break out of the range, kind of the way the volume kicked in once you broke down in the range. So as you rally back up, again, you're most often not going to see a lot of excessive volume coming in, because there's just not a lot of supply coming in for demand to overcome, because it gets wiped out on that. First of all, on the range, you got to understand, we've been in a 5-month range. That's been supply coming in for 5 months. So if you're in an accumulation or reaccumulation range, what that means is all that loose supply is going into those longer term holders, the professionals who are waiting for the breakout higher before they're going to sell, right? They're waiting for some higher number to come in before they're selling. And so you're taking out, basically the way to think about it is the retail supply in there. And then retail doesn't have a lot of supply left in, and price can move its way up without having any kind of excessive volume really going into it until you're getting that breakout. And by the way, real quick here, as far as retail goes, I always hear this now. It seems like the big thing is, where is the retail money going to come from? Guys, listen, very little of the market is actually retail participants, something around 25 or 26%. And that's only recently. Prior to the pandemic, it was like around 20%, which means most of the volume is not going to be retail. So when you ask, where's the retail money come in? My response is, it doesn't really matter. Retail is one very small part of the overall market. When they're in there, they're going to be used as liquidity. Generally speaking, again, I wouldn't focus on where's the retail money going to come from, because it doesn't make up a huge portion of the market.
What do you think, Sam?
What do I think? I mean, as far as retail not making up a large portion of the market, to be honest, I don't really have too many comments, just because I was kind of absorbing all the information. Chris, I guess my big question would be is retail always going to be kind of a lower player? Like, are there any markets? Because I've heard you kind of give this theme all the time, where retail is a certain type of person, right? And retail is often this way in the market. And unfortunately, like, it is what it is, right? But Bitcoin, as far as Bitcoin's concerned, like, was that true pre-BlackRock ETF? Like, is your opinion on retail changed and how it's affected the Bitcoin market because of some of the more institutional players moving in? And has that changed, like, how you look at some of these charts? Because I just wonder, because I always hear that recurring theme from you, and I don't know if that's a basic principle or if that's just something that is how it is now due to institutions moving in.
Yeah, so Bitcoin itself, I would argue, I don't have the numbers right with me, but I would argue we had a higher percentage of retail as opposed to professionals. 2015, maybe even 2017, around there. But now we have to look at it and go, okay, who's involved today? And as markets mature, as they become more mature, and you get these professionals and these institutional entrants, there's just no way retail can keep up with. If you've got somebody that has, $50 billion assets under management, 150, 300, billion. I mean, there's just no way that retail. And by the way, guess what, guys? I'm retail too. I don't have that much. But again, when you look at that, you become a much, much smaller fish there. And so I think that's an important point to bring up, because when you come into the markets, again, I still remember when I first came in, 30 years ago, and the way that I viewed the market, the way I thought about markets, obviously a lot different than what I do now. And I've been through at least the same mistakes that everybody else goes through when they first get in, probably more. I was a bit stubborn. It took me a few years to actually sit down and go, damn it, I need to stop feeding the market. Otherwise, I'm going to have to continue working whatever job, and I don't want to do that. So I had to really learn. So when you look at that and you say, okay, well, retail generally, acts a certain way, it's because they do, which is why we have such a churn with retail traders, right? We look in there, less than 3% of retail traders actually become consistently profitable. Basically 92 to 95% of them are out of the market within, 3 years of coming in, and they haven't been successful in that time, which means for 3 years, they've continued putting money into the market. And so we see this time and time again, and we've seen it throughout the history of, you can look at this, the Dow, which has been around decades and decades and decades. And it's the same every cycle. It's the same type of person that comes in through retail, same type of person that goes out. And so, there's always there's that saying that if you continue to do what you do, you're going to continue to get what you get. Or in terms of trading, if you continue to do what retail traders generally do, you're going to get the result they generally get. And again, if that means that only 3% of them actually become successfully, consistently profitable, that's who you should be mimicking, not the other. But when we first come in, again, people come in the markets because it's easy. You just got to be 18. You just got to have some cash to throw in there. And there you go. Crypto makes it even easier, or has until, especially up until more recently, right? Not worrying about KYC. You could lie about your age. You'd be 14 years old jumping in the crypto market, right? But, it's ease of entry. You just have to have a few bucks sitting in your hand and you can go in. So for a lot of people, trading in the market is the same as discussing politics or religion. Doesn't mean you have any special skill about it or special understanding about it. You have your opinions and you can get involved.
Just because you can do it doesn't mean you're good at doing it.
Yeah, exactly. But again, even when I first came in, back in 95, I guess it was 93, 95 in that area. I thought the same way. I was like, man, listen, I got me a few bucks. I am not going to work for somebody. I'm going to get in here and make my living. And it sucked for years, kind of getting, because it was so, in my head, I was so like, I can do this on my own. It's not a problem. I don't need nobody's help. And it wasn't until I really kind of sat down there and said, well, shoot, obviously what I'm doing is not working. So I started seeking out real people that have been successful in markets, talking to them. You have to pay. The reality is a lot of people want mentors for free. But and sometimes you'll get them. But at the end of the day, I don't think whatever you're doing, don't forget even trading, just anything in life. If you want to understand how to do your finances better, if you want to understand how to start businesses better, if you want to understand how to run your business better, right? Pay the money. If you pay the money, you're going to get a return on that money, but only if you're willing to listen and willing to implement those things. But that gets a lot harder in trading because, again, everybody thinks they understand what's going on. And really, the market doesn't work the way that most people tend to think it does. And so that's why so many of them get shut out. Now, professional traders are different. Professional traders approach the market differently. And when I'm talking about professional, I mean more like trading desks, large organizations, large banks, large companies, stuff like that, hedge funds. They have weight that they can push behind them. And that weight gives them a little extra oomph, even when they're not exactly doing the greatest way of which, they're doing it. They might see order flow coming in, right? If you're trading for a bank, you're probably seeing order flow coming in from your bank, the people that are running through your bank, right? And so if you've got a big bank, you're seeing a lot of order flow. And so you're trading that. So there is a difference between your trading desks of hedge funds and large companies, whatever, compared to your retail trader, because your retail trader doesn't have the information, so they trade differently. And so, there's just a lot to understand in there, when you come in.
Chris, I know we're past the hour, but I wanted to, there's a comment from Nick Falls. It says, retail is like poker. The bigger stack has the bigger advantage, but that doesn't mean the lower stack can't win.
Right. Yeah, exactly. Again, it comes into, if you have not been successful, and when I mean successful in markets, if you're not making enough in your trading to pay your bills, you're not successful yet. Doesn't mean you can't get there. So if you're not at that point yet, and especially if you're not consistently building that equity curve, if your equity curve is not, consistently going up like this, then you have to absolutely, if you're listening today, you have to absolutely stop and look at what you think is going on. Look at your views of the markets and how you think it's working, especially if you've been trying to trade for a year, 2 years, 3 years, and your equity curve has not continued been up overall consistently, right? You have to stop and you have to go, okay, maybe I don't know what I'm doing. And that's the hardest thing for people to admit. As human beings, we tend to downplay the difficulties we have and the wrong things that we do. And we play up, those things that we might do correctly or might end up giving you with a good result. Even if it was just because we were lucky, we're going to attribute it to we knew what we were doing. And so that's really difficult, especially when it comes in trading. But, again, guys, I always talk that the things that we learn about trading and the way we approach it are exactly the same ways in which we should approach everything else in our lives. So whether it's your relationship, whether it's your business, whether it's your job, trying to get promotions and whatnot, and you're getting looked over for them, what's going on? You say, oh, well, I'm doing everything I need to do and I'm so great, but yet Billy Bob's been working there 6 months and he got promoted before you. Why did he get promoted? Well, the first answer is always like, oh, well, he's the boss's nephew, or he's kissing up to the boss, or she's sleeping her way up, And most of the time, that isn't what's going on. Most of the time, you're not doing as well as you thought you were. And so you have to decide, do I want to be right or do I want to be profitable? And that's not just in trading. That's with your relationships. That's with your job. That's with your business. Running businesses, I've got the business I have now. I've made a lot of mistakes over the last 7 years we've been in business. And I can look at it now and go, yeah, there's some mistakes. But it's tough. It's tough to go in there and say, okay, yeah, I'm screwing it up here. How do I fix that and make it better? I should have been doing this, but I was doing that instead. I need to change that, because otherwise you're just lying to yourself and you're going to continue getting the same results you got, which, especially in trading, usually are not good results. And I say these things, and again, people tend to get really upset a lot of times when they hear them, because we don't want to admit that we have the issues that we have, because we seem to think, oh, that makes us look weak. That makes us look poor. That makes us look like we don't know what the hell we're doing. You know what, guys? I'm going to tell you right now, if you're listening, screw that. If your relationship is not where you want to be and you love that person, figure out what the hell you're doing wrong. Now, it's not that 100% of the time everything's going to be you. But as long as you focus on the things you can control, which are the things that you do, and you don't worry about the things you can't control, then at least if the relationship works out, it's because you did those things. If it doesn't, well, that you did what you needed to, but you have to be honest with yourself first. Same way with trading. You got to get in there. You got to be honest with yourself. It's going to suck at first. It's going to hurt. But the good thing about it is, if you're more focused on excelling rather than just being right, you're going to get a lot further in whatever it is that you're trying to follow through with in life.
I agree with everything you just said, man. The only thing I didn't agree with was the woman comment maxing out at 25.
I meant.
See, I would say it this way.
Wise.
I would say that men don't have a chance at maturity until they're 27. Their brains are still all soft and weak.
That was the
their
big
egos
point I was trying to make. Men mature,
See,
when
that's
they get
why the
into
girls like me better than you do, because I'm not going to bounce on the boys, and the girls are just doing an awesome job. They're wonderful forever. That's my view.
Yeah, there you go. But yeah, so, life, again, it comes back to the thing I said earlier, which is there's truth and then there's perception of the truth, right? There's how do you view it? And you're going to react to how you view things. So, at any point in life or in trading, if you don't accept the truth of what's going on and you lie to yourself, which we're very good at doing as human beings, and we choose to do that, you're going to notice that you're not getting the results. So you really have to step back and go, well, I thought I was doing great, but my numbers don't make sense. If I'm doing as good as I thought I was doing, then I should be on this consistent, profitable basis, and I'm not. And you got to step out and be objective like that.
Yeah, Chris, thank you very much. I think we're gonna end there. And on your buddy Fibaswami's comment down there, this is what I love about doing this. And you guys remind me when I get irritated at doing this that I actually like this part of it, because I will get irritated and bored of doing this, but I just sometimes need a little bit of persuasion and love. Gary took your advice, was at a restaurant, heard the people next to me talking, financial heartbreak. Cat goes in, pays the bill, walks out, doesn't tell anybody. I want to share a story with you. Me and my kids walked into an ice cream store once. They sell, the ice snow cones. Walk in. I mean, these snow cones are like $7 each, right? $21 worth of snow cones after 3 o'clock after school. And I walk in, I said, hey, I want a watermelon. I want a coconut. I want one of these guys. And all the kids are excited. And the lady looks at me and says, well, thank you very much. She gave them to me, like no charge. Someone had come in before me, smashed down $100 or $200 and said, next people that walk into this restaurant, their food's free. The snow cone's free. I started doing that, dude. It is such a cool little thing. And you know what's really cool? You're going to go back to that same restaurant.
Yeah.
Right? You're going to go back and go, well, that was cool. Somebody here is really nice. This required very little energy, right? And it doesn't have to be $100. It could be, hey, the next snow cone. That was a cool, I can't even believe that I'm still remembering that. That happened 3 or 4 years ago, but it's going to probably go away with me to my grave, right? Because it was really nice. Just easy, nice, and nobody lectured me. Okay, somebody set a really cool example. So, Sam, are you going to do something nice for somebody today and be anonymous about it, or are you going to be
absolutely
a cheesy young man?
He'd be like, "Now, listen, I did it. Pay attention, folks." If you don't mind, I got one story to share about that as well.
Please.
And so, when I was in law school back in 2016 or so. Not that I needed the money at the time. I was dating a young lady, and it was me and my young son at the time, and she had 2 kids, and we had gone out to eat at Five Guys. And Five Guys has never been cheap. And so we got 2 adults, 3 kids there. And our bill
never been cheap, but their food's good.
Oh man, it's amazing. I pay it all the time. But this was 2016. It came out to like $90 for us to go eat there. And we weren't looking like we weren't saying all bad things about money or whatever. We just kind of were the next people in line. Older couple in front of us, probably in their 70s or so. They ended up coming up there and they paid for ours. And we didn't even look like we needed it. We looked like we were doing fine or whatever. But again, it was just this idea of, I guess for them, they saw what appeared to be a young family and, wanted to step up. They say, listen, we've got a few bucks. We can do this. It was just such an amazing feeling. At first I felt a little guilty because I didn't need it, but that encouraged me to do the same thing as well after that, which is, what I go around doing, though I don't do it so people actually know, it's kind of like that idea where you give them a few bucks, you say here, the next person or the next 3 people or whatever, or whatever else fills up this you can do. But yeah, so, it's amazing the feeling it has on you. Even if you don't need that, it really kind of opens your eyes to the world isn't so bad as what people make you think. People aren't all against you. People, because they believe something, politically different or religiously different, aren't necessarily your enemy, right? There is good in the world. People do step up and just try to make the world a better place. And I absolutely love that feeling. So, yeah.
Yeah. Hey, listen, on this point about, doing something nice for rich people, I know, when somebody buys me lunch, because I always buy the lunch. I mean, I'm just like, hey, I'm taking my card out. I've just become, okay, I'm going to buy everything. And every now and then when somebody, hey, I'm buying lunch for you, it actually impinges on me. It's like, you know what? It's okay to buy somebody that's wealthy, most wealthy people are always writing the checks.
Yeah.
And like I would, like if I was with a billionaire, I'd buy him a cup of coffee, man. And like, he's going to appreciate that. Like you guys don't think these people don't like the same thing that everybody else likes. It's and people love people being nice. So
yes.
And paying your ticket, especially wealthy people, they love to see people that are willing to pay the ticket, because a lot of people, like you guys reaching out to me saying, hey, give me something free, fucking never happen. Okay. It will never happen, because I will never disrespect you that much.
That's right.
I'm sorry you had to ask me and that you disrespected yourself to ask for something free, but I will never, ever give you anything free. You will abuse it. You will not appreciate it. It's just the way it is. And so will I, dude. You give me a Bitcoin, I'll abuse it.
Yep.
I have to want to learn. And this is why I keep going into new industries, because if I don't, I get so bloody bored that I become a problem in that industry. So I just got to keep, I know myself though. So I just got to keep going in industries where I'm constantly asking questions, and I'm not the smartest guy in the room. I hate being the smartest guy in the room.
Yeah.
It feels like too small of a room if I'm the smallest guy in the room.
100%.
Sam, how are we going to end this, buddy? Can you help me?
Yeah. How do we always end it, Gary? I mean, we've been talking about it, but what do we say? Go out there, do something nice for somebody, and don't tell anyone, right?
Dude, I think that's a brilliant idea. I'm not sure where you got that idea, but I'd keep pitching that one. You guys have a great day, okay? I think Bitcoin's going to have a little recovery here. We're probably going to test and then go test 52, 53 again. That's what I'm thinking. Chris, I'm probably going to try to play some orders in that bandwidth and see if I get hit. And if I don't, I'll relook at it in the 60s. But you think that's kind of the way it's going to play out this week?
You know, usually with that type of volume, that being so explosive like that, so much greater than the volume at the other lows in the range, especially when the range first started, most often you're going to get a test of that low. And so you're looking for a higher low. Here's the key, guys. If you get that test, which you most of the time do, you're going to look for a higher low with a lot less volume than what you had there on that big candle. So you look at the daily time frame, you're going to look for a daily pullback. You want to see the volume be less than what it was.
So it could be 50 million or 100 million, but it's going to push the volume as if it was 300 or 400.
Yeah. You just want that lesser volume, because what it shows you is that supply is not interested in pushing it down below that swing low where they had that big chance. And usually that's your indication that's successful test. You're going to head up higher from there. You
guys are awesome. TJ, thank you very much. I don't know about breaking records, but we got 2,000 people in a room, 1 hour. That's pretty cool. 3,241 people in a room.
Awesome.
1 hour and 18 minutes. That's really good, guys. Love you guys. Appreciate you. If you have critiques or stuff that we should be doing that you'd like to see, let us know. We're open to changing. And you guys go out and be nice to somebody today, even if you're miserable. In fact, the more miserable you are, the quicker you need to go out and do something nice for somebody, even if it makes you throw up. All right, guys. Thank you very much. You guys have an awesome day. And I'd be buying Bitcoin at 52, 53, 54, 55, 56, 57, something like that. Thanks, guys.